Okay, I'm recording this video after close of trade Tuesday, 6th of July 2010, and happy July 4th to everybody who is celebrating it. As you know, the markets were shut or very quiet on Monday. All the activity kind of started back today on Tuesday. And just going to run through my E-mini charts. The first one I want to show you is the beta sine wave indicator on a daily chart of the E-mini, and we've had a cyclical low been confirmed today with the activity. We ended up about at 10 points at the end of the day, but we've got kind of the cyclical low printed here on this time frame, which for me is suggesting that we're going to see a little bit of a rally going forward. Now, that's not to say that there's a lot of bearishness in the air. There's a lot of discussion about kind of austerity versus deficit spending. We've got very kind of bearish calls coming out with people like Neil Ferguson, Neil Robini, Steve Keen, who's an Australian economist who is really excellent. If you've not kind of chased down his work, I'd suggest you do, versus kind of the Paul Krugman, deficit spending to kind of route. So although I'm a big believer in things are going to get worse and a lot worse, that's not to say we don't see kind of rallies in the market. So I think we're going to get a weak rally kind of going forward, or at least that's the hypothesis. But let me just show you what's kind of lining up on my chart. So anyway, there's the daily cyclical low on the daily time frame has been put in. And in terms of the weekly chart, we've got this kind of pullback level here and a bit of cyclical support. Sometimes the pullbacks kind of, or these cyclical turns get printed a little bit early. We could see that this might be a cyclical low here. The pullback just printed a couple of weeks early, and this is a better place for that cyclical turn. Time will tell. Then if I go to the 81-minute chart, the next kind of resistance point, this is kind of as we go down the time frames, the next resistance point will be when we get a cyclical turn on the 81-minute chart. And if we start to rally above the high of today, then the next logical place for a kind of a downswing will be when we get some resistance here with the 81-minute chart. Then lastly, just to show this 135-minute chart, this is we've kind of broken below this support level, but this is kind of typically one of these areas where I think a break below is an overshoot of the support level, kind of gets caught by the next time frame up, and the next time frame up is the daily chart. So and this is the cyclical low we're seeing here. So that's just in terms of cycles. I think we're going to get a little bit of a push going forward. The next chart to show you is on the momentum chart, just using the 135-minute chart, because I've referred to this over the last few weeks. We had our exhaustion kind of selling over the close of last week, and since then we've just been putting in these kind of bullish divergent points here. You can see today we had a little point bullish, another divergence point kind of print today. So it's starting to say that the exhaustion selling that we've seen on the downside is starting to abate, and we might be seeing a little swing to the upside. This was this kind of famous exhaustion selling that I said happened before the flash crash back in May 6th, and so we've had that exhaustion selling now as we've kind of broken below this 1040 level. And this people might think, well, we've broken below 1040, therefore we're in a downtrend, and the market kind of reversing and going above 1040 and kind of breaking into a small uptrend would surprise the most number of people. Confirmation in kind of some other markets. We've got the crude oil market here again, made a cyclical low, confirmed with today's activity. That was kind of Monday's trade, I think, so it printed actually a Rambo pattern here, and you're starting to see the sell-off that we had in previous weeks has been met. This last kind of downswing has met the same kind of price points that we had in previous weeks here, but the amount of selling that was involved was less, so we're likely to see some kind of that's effectively a bullish divergence kind of that's setting up there. And then going to the euro's kind of activity was kind of interesting last night, that it actually kind of broke on through this pullback level and kind of seems to be breaking into an uptrend here. And I was talking about this, that we'd had our exhaustion selling kind of several months ago, and this kind of last low down at the $1.19 level was really being made on a lot less kind of selling activity, and so it's kind of we've taken to the upside, and it looks like we're in a little bit of an uptrend with euro. At some point we'll form resistance. We've had quite a lot of buying at this point. At some point we will kind of pull back, but I do believe that we might have seen the lows for the euro at $1.19 for this cycle at least. And then I've not talked about this indicator for a long time, and every time I do, everybody kind of gets interested and says, well, you should release this. This is the better X trend indicator, and this is a trailing stop based on exhaustion volume. I quite like this. I look at it every day. I've not released it as an indicator just because, well, maybe I will. Maybe I will, and maybe I'll release it as a free indicator because it's based on better volume. But Here's the point to this. It trails a stop based on exhaustion volume. You can see that these little kind of white lines, dotted lines here on the downside, are just kind of trailing a stop behind this this downtrend. Similarly here on this uptrend, this red dotted line is trailing a stop below the below the subtrend. The logic of this indicator is that exhaustion points kind of show legs down in the market, as we had here. We broke through this support level at this point, bang, with a large volume, kind of exhaustion volume down bar, and the market kind of took off to the downside. So these exhaustion volumes kind of start moves down. They also end moves down because you get exhaustion selling at the end of a move, and you kind of don't know when that move is over. My kind of hypothesis is, you'll know when the highs of those bars are broken that the move is over. So that's how you trail the stop down, and this is the exhaustion selling on the downside here and here. And you can see that we've had this kind of low. Now, what was interesting in today's activity, this is a 135-minute chart, so there are 3 bars in every day's activity, and these were the 3 bars of today's activity. The sell-off, the first third of the day, we were kind of reaching new highs, trying to break up into the 1030s levels. We kind of reached some resistance, which was very close to the exhaustion volume point that we had before here, and then this selling bar here at this point, although it was an exhaustion down bar in terms of the amount of selling that took place, the selling activity vastly overtook the buying activity, but the amount of volume traded was actually quite low, so we had a very low volume bar selling at that point. Now, if you can see, kind of coming into these lows, we had pretty large selling here, these 2 bars, very large selling at these points here, and then this last kind of push down that we had kind of mid today was pretty low in terms of the volume activity, which is suggesting that the sellers have run out of bullets at this point, that they're just kind of getting exhausted and the market might turn around. The critical point is going to be the high of Tuesday's activity. If the high gets taken out tomorrow of Tuesday's activity, it kind of confirms the cyclical turn that we got on the daily time frame, and it'll confirm that we're in some kind of an uptrend for a period of time, who knows how long. So that's what I'm going to be looking for, and that's kind of an interesting bar down today, that it was kind of a low volume, but it was kind of an exhaustion volume down bar. In terms of other kind of correlated indicators, just look at the beta trend oscillator here, and we've had the trend oscillator. Trend oscillator always tends to turn a little bit earlier. We had a little bit of double kind of turn here. I actually like these. These are very good signals when you see them with these kind of leg downs. And on Friday's activity, we had a bullish divergence signal. So the amount of selling, although Friday was a down, if you recall, the down close on Friday was pretty severe. Although that kind of down activity at the end of the day on Friday was pretty severe, the amount of selling overall was less than we had in kind of previous moves down. So we had a bullish divergence point here, and we've had our trend oscillator turn. So again, just for me, kind of more kind of bullish readings in the marketplace. And then if just look at the long-term chart, the 40,500 tip bar chart, this is the exhaustion volume selling that we saw at the beginning of last week, and then on Thursday and Friday's activity, we're finding this kind of bottoming activity. This was what happened on the overnight session before we had the open on Tuesday, and the market kind of sold off really hard, but on extremely light and very small. It was typical kind of market manipulation and after hours type stuff, and I know Carl Denninger has been talking about that lately. We saw that we kind of spiked down to 1002 here, but again, it's kind of typical places that you'll see the successful professional traders kind of trying to push the market around the after hours, where they can do it with very kind of few contracts traded relative to during the day session. So we had that kind of spike down, second cyclical turn after an end of trend warning signal here. So we came back, found resistance at 1040 with a professional bar up here and coming into a cyclical turn on this time frame. We've come back down. We've had a little bit of a cyclical turn print here. We've got professional activity with these blue bars coming in at these the lows of the day here, and you can see the amount of selling that we had again into this midday type decline was relatively weak compared to the exhaustion selling that we'd seen beforehand. So we still need this high to be taken out and for us to go above 1040 for real kind of confirmation that the next swing will be to the upside. But that's what I'm looking at. So I'm starting to see some kind of bullish patterns in my charts, despite all the news being pretty bearish out there. So hope your trading is going well.